Moodys Analytics says there's a strong chance Donald Trump will win re-election anyway. Moody's has a record as one of the most reliable forecasters in the US. It got it wrong on 2016 because of voting numbers, not the underlying thesis. Now, it uses three separate models to predict how a state will vote. It uses data on personal finance, the stock market, and unemployment. Note, policies of the candidates are irrelevant here. On each basis, it says Mr. Trump will garner enough electoral votes, not only to cross the winning line of 270 electoral votes, but onto a landslide. Dan White is head of fiscal policy research at Moodys Analytics, co-author of the report. Dan, when you did your numbers and you realized what the conclusion was, you knew this was going to be controversial.
Yeah, Richard, it's always fun to walk into a room and know that you're immediately going to excite half the people and disappoint half the people. It's always a pleasure.
Now, the importance of your work is that it doesn't rest on the candidates or the policies. It's already based on existing demographics and economics within the state.
Well, yeah, it's existing demographics and economics, but it's also the forecast for economics as well. So keep in mind that this is just a forecast. All of the economic data between now and Election Day is based on a forecast. So if the economy falls further or more quickly than we think it might, then these results could certainly change.
But you have factored in, for example, the China-US trade war, the effect that's having on growth, the effect, of course, of the Fed's easing of monetary policy. So how do you come to this conclusion?
So, as you mentioned, we have three different models. Each of them looks at varying levels of economic forecasts based on what we think is the most likely outcome of what the economy is going to do. And the bottom line is it doesn't look like the economy can fall quickly enough to really turn the election towards Democrats. And I think that our model does a better job of some other models that are out there in doing that because, as you mentioned, it really focuses on the state-level demographics. So we look at what the difference in gas prices does to voters in North Dakota versus California. It looks at what the impact of unemployment being below the full unemployment rate in Kansas is different than the full unemployment rate in Pennsylvania. And that allows us to really not just try and predict the outcome of the election, but really focus in on which states are the most important. Right now, we look at states that President Trump won in 2016 for the first time in a very long time, like Pennsylvania, like Wisconsin, like Michigan. And we can see that the economics in those states are doing very well. And to the marginal voter, that might be enough to get him over the finish line.
Now, you see, that's interesting because the received wisdom amongst the political elites is that it was only 100,000 votes that won President Trump the election, and it was across those three states. What you're saying is if that wisdom is true, then it's the same wisdom that could benefit him next time round. A smaller number of votes because of the economics that gets him across the line.
Absolutely. And one thing that we did do differently this year than we've done in previous election cycles is we actually looked at demographics, as you mentioned, or sorry, at voter turnout. One of the things that the main reasons why we missed the 2016 election was that voter turnout patterns were very different than we had seen in previous elections, especially in the, those 100,000 voters that you talk about. And so when we look at those different scenarios, we see that the only way that Democrats really have a plausible way of being competitive outside of some, shock to the economy or shock to politics is to make sure that they have the better turnout in those particular states.
Finally, how do you factor in the aberrant factor? I mean, the fact that this is a maverick president. Now, yes, he was maverick in the previous election, but now the US voter has seen 4 years, or will have seen 4 years, of stop, start, reverse, back, up, down, every which way and backwards policy making. The Trump way of governing, how do you factor that in?
Yeah, well, we looked at a Trump ad factor, trust me, and we couldn't find anything statistically significant, unfortunately. But one way that we are able to bring that into the model is we actually include the president's approval rating in the model. And that's one of the things that's actually very fascinating about Donald Trump is it's no secret that his approval rating has not been as high as previous presidents. But one thing that is really extraordinary when you look at his numbers is that it doesn't move at all. It's very difficult to convince somebody who's a strong Donald Trump supporter to not be a Donald Trump supporter. So for previous presidents, we've seen, up to, 40, 50 basis point change in their or percentage point change in their approval rating. Donald Trump is moving in a very narrow band. There's about 40 to 45% of the country. It's a very strong believer in Donald Trump, and it's very difficult to convince them otherwise. And so really the question is, what happens to that other, 5 to 10% of folks in between that can be persuaded one way or the other, where the model banks on those being the marginal voters who will be most impacted by economics. And with economics looking very good for the next year, that really paves the way for a very successful 2020 for Donald Trump.
You can't argue with success, and you have an exceptionally good record of it, but we can say that you will be proved right or wrong come next November, one way or t'other. And we thank you for joining us this morning. Obviously, things will change. Thank you, sir. We appreciate it.